ONL, Orion Properties, received a unsolicited and unbinding bid on all of their outstanding shares here of $2.5 a share from Kava Capital Management. What does this mean for shareholders? Let's talk a bit around this unsolicited offer. This is not the first time I've seen an offer like this. I've seen it in the case of ONL, for example, where I think the acquirer was able to get it at an excellent deal. And there are two types of acquisitions, in my opinion, broadly speaking, in terms of these smaller and mid-cap stocks. For example, we see in one instance where a company is severely undervalued. We see, for example, ONL and, in my opinion, also Orion offices. And then we see when a company is in trouble, for example, in the case of Foot Locker that I also talked about a while back, saying how the company was in decline, selling off my shares years ago here. I think it was very, very far away. Anyways, we have an offer on $2.50 a share. This can mean a number of things. In my opinion, it's an excellent deal should management accept it. It would be pennies on the dollars in terms of the assets that Orion Properties have on their balance sheet, but could be positive for shareholders if management does not believe in their potential to continue to rent out the properties. We have 74%, something like this, occupancy in terms of the total amount of space usable on the last quarterly earnings report. And if management does not believe in their ability to sell off vacant properties and make new long-term leases on the current ones, well, then the acquisition bid from Kava Capital Management is indeed very alluring for shareholders, and that could be a positive thing. On the other hand, if Kava has been able to acquire a significant stake, their last filing we saw that they had 9.7%, but if they have amassed more shares and are able to forcefully take over by using pressure, continuing to buy shares, making a vote, talking to other shareholders and making them agree on the bid, well, then we could potentially lose out on a bull rally from a value investment in this case. And this can be very annoying as a retail investor, because, you know, this is not my first time. I've seen it before when I found an investment, a company that I really liked, started acquiring shares. I was able to buy a lot of shares. In this case, I think like somewhere between 6,000 and 7,000 shares of Orion Properties at very low prices, and I believe that they have the potential to go a lot higher than $2.5 a share if we look at the normalized funds from operations in this case and what they could get from a real estate portfolio like that. So quite a bit in terms of disappointment there. If you look at it as perhaps a trader and you have more of a trading mindset, well, then of course roughly 20% premium above market value can be very nice. It's a quick gain, you take it. But if you have more of a long-term investor perspective, then it can be quite annoying, frankly, because that's a lot of capital that you have deployed in a manner that you're happy with, and all of a sudden your shares are getting forcefully bought out. If the offer gets accepted by 90-something% of shareholders, you can get forcefully bought out. I don't remember exactly the amount, but 90-something% is the limit for that. And then you will be forcefully bought out of the shares that you hold. And you need to redeploy that capital. And this is a time-consuming process. I mean, you guys, you only see the end product here on the channel of me doing a short video talking a bit about management, talking a bit about the business, the outlook, revenue growth, profitability, competition, all of that stuff. But behind the scenes, I look at a few earnings calls. I also read a few news stories, which I don't really like because they are very angled in a way to drive a certain agenda in many cases. Some press releases, and then of course I take some time in between to contemplate, smoking a cigar, thinking about the investment, because there's no rush to get in on it. But all of that time I have to do again to redeploy this capital if the acquisition goes through. Orion Properties in this case was the second largest position now in the road to $100,000 dividend portfolio, where I try to take a portfolio from $0 to $100,000 as quickly as possible to see how quickly I can do it if I had to do it all over again. And then it's a small, very small part also in the main growth portfolio because it was so cheap, so I just snapped up 1,000 something shares like that over there. And I also have deployed some capital for some family in that one as well, when it was dropping from $4 super low. It was just so cheap, and the yield was nice enough and, in my opinion, secure enough for a person in the age of 55, to 65, somewhere in that range, to be able to put not a large but a small part of the portfolio into. And that means that, alright, they get bought out 20% premium, have to find new use for that capital for myself and a loved one in that case. So that's going to be time consuming and annoying. So make sure to suggest some more stocks in the Discord or in the comment section below that you want me to take a look at, because, well, if this acquisition goes through, which they tend to do, we see BlackRock and Blackstone has acquired a lot of these smaller REITs. Should have mentioned that earlier in the video as I'm walking here talking, contemplating the research that I've done on the stock. But we've seen many smaller, for example, residential REITs as well, being acquired, as this sector is one that's been in the bargain bin for a few months now, a little more than a year actually, ever since these interest rate increases came along. So BlackRock taking advantage, in this case Cava Capital Management also trying to take advantage, but hopefully there's something left for the retail investors. That's you and me. Anyways, that's been it for this video, and as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.